I just want to start by going over like 3 key topics or points that's kind of something to have in the forefront of your brain when you're going through this process. So she just talked about the credit boot camp, so definitely think about that, because the first thing I'm going to say is credit. When we get started, normally we have a minimum credit score of 620, okay? So whether you have no credit right now, or you do have a credit profile, or bad credit, we can help you with that. So definitely know where you're at and what your history looks like, because that credit score is really important. 2 kind of things that I like to say about credit is, it sounds silly, but pay your bills on time. If you don't, or you have a 30-day delinquency in your bill payment, it can seriously dock your credit score and take time to repair that. The second thing is credit card utilization. So if you do currently have a credit card, we try to kind of rule of thumb, say 30% utilization of that credit card limit. So let's say you have a $1,000 credit card limit out there. We would like to see that at like a $300 balance or lower. So the credit bureaus view that as something that's beneficial and good. So your credit score is going to be a little bit higher when you see that utilization a little bit lower. Okay. The second point I want to talk about is your job time. We like to see a 2-year job history. Okay. Now, as a first-time home buyer, that might not be the case, right? You might have career changes, or with a pandemic, gaps of employment. There's so many different multiple scenarios that can be out there. However, that's where your lender comes into play. Come in and sit with us and we can kind of see the picture or what's going on, and we have opportunities to help you, or at least guide you through that process. Okay? The last step, but I kind of consider the most important, is planning your money. Okay? It takes money to buy a house, right? That's why we're here, to help you with this. So on the table, you're going to have a handout that says Summary of Charges and Reserves. We're going to break this down a little bit for the cost on this one. Particular is an example of a purchase price of $100,000. And as a first-time home buyer, you have the opportunity or to be eligible for a 3% minimum down payment. Okay, so that's talking about $3,000 on that $100,000 purchase price. Okay. So at the very top, it breaks that down. Now that down payment is directly associated with your loan. So $100,000 purchase price, that $3,000 goes against that, and your loan would be $97,000. Okay. Now the next section says Summary of Charges. That's what we're going to call your closing costs. And then the next section is your prepaid items. Okay. Closing costs are expenses that are over and above the purchase price. Okay. So that's going to be an appraisal. That's going to be any inspections you do on the home, whether you do a home inspection or a pest inspection. As far as the lender, we don't require a home inspection, but it's always a good idea to understand, the property you're getting into. The pest inspection, and then title work. So what title work is making sure that the property is free and clear for you to purchase. So you have the $3,000 from your down payment, and then on your little handout here, it says about $2,800 for those closing costs. And then we're going to have your prepaids and reserves. So what that is we use the term escrow. So what escrow means is your taxes and insurance for that property. So at closing, you pay for your first year's hazard insurance up front. And then you'll also see that we're collecting for 2 months insurance and 2 months taxes as well. So when you close on your property, you're not going to have a mortgage payment for probably a couple months. So that's why you see we're collecting for those 2 months. So when you start making your payments, you don't fall behind. So when your taxes and insurance come due, it's set aside in your escrow account for that to be paid in full for you. So a common misconception I feel like with first-time home buying is, okay, down payment of 3%, I have the $3,000, let's go. And unfortunately, there's a few other things that tack onto that. So that's what helps show this. So you have the $3,000 down payment, about the $2,800 on your closing costs, and then about $2,200 in your escrow setup. So all in all, that's about $8,000. That sounds like a big chunk of change. But again, that's why we are here, and these ladies are here to help you with all the different resources. So those are a few things just to kind of keep in mind: your credit, your job time, and start saving that money to move forward with the home buying process. Something else I want to break down is on the back of that form, it goes over your payment. So kind of like a car loan, if you've had that in the past, you have a principal and interest payment on a car loan. So you might see on Zillow or Realtor.com those calculations that pop up, and I can afford that, right? But there's other things that go into payments sometimes that doesn't disclose. So here there's 4 parts to the payment that shows on this form. Your first is your principal and interest. So your principal is what actually pays down the balance of your loan. The interest is the cost that you're paying for the loan. Okay? Then you're going to see your hazard insurance and then your taxes. So when you escrow, that's already included in your monthly payment. So it's out of sight, out of mind, so you don't have to think about that, okay? And then the last one is private mortgage insurance. What that is, there's really not a benefit to you, unfortunately, in that. What that is it's a protection for the lender in the event that you were to default on your loan. So it's a simple protection for us. Now, when you pay 20% down on your loan, that will fall off, okay, if you do have a conventional loan. So we have a whole bunch of different loan types, but with that one specifically, it will fall off in the future for you. So all in all, that gives you a really brief kind of example and breakdown of cost and things to think about. So I'm going to have Amanda step in, and she's going to go through kind of what the mortgage process would look like.
Every financial institution has different services that they offer, whether it be conventional, FHA, VA, rural development, bridge loans, construction, in-house portfolio loans, adjustable rate mortgages. Make sure your lender definitely goes over what kind of product you're getting into and breaks that down for you so that you don't feel like you're in the dark. Because with Heartland, we try to find what suits you as an individual. So what someone may qualify as conventional, maybe you only qualify for FHA, or there's different things that we have to offer for that, okay? So the pre-approval is very important, is to kind of tell us what your goal is, how much money you have. We do the application, we see what your credit is, we talk about the payment, see what you can afford, get you pre-qualified. Okay, so then when we send that pre-qualification letter to your realtor, then they know they can start putting in the offers for you and help you buy that home that you are looking at. So getting pre-qualified is probably the first step. Realtor might point you in that direction. They might be nice and show you a house or two, and then they're going to say, let's get you qualified. And then if you're qualified, then if you put in an offer and it gets accepted, then we get the contract. So the contract, we receive that, and then that's when we get all your documentation. So then that's when we want to make sure we get updated pay stubs, W-2s, all of that stuff, which is listed right here, home loan document checklist. So you can just kind of prepare as to what things you'd have to show to your financial institution. And then, so you'd bring in that and your contract, and then we get title work and appraisal ordered for you, and then you essentially close in like 30 days. The inspections, like Arika said, the home inspection is not required. Certain types of loans will require pest inspection and well and stuff like that, so that's kind of subject to the loan type. But those are other inspections to consider to cover you and make sure that your home is in good standing. Now we'll get into the free money, what everybody wants to talk about, right? I don't know what the qualifying income is, but there is a limit. Like, you can't make over a certain amount of money. We have 5 slots a month, okay? So you're house hunting, but you're not on a contract. Well, I can't delegate that you're going to be one of those 5 spots until you have a contract. So it's kind of like perfect timing situation, because then maybe you do go under contract, you are depending on grant money, but my 5 slots are already filled for March. So either they're going to have to delay closing, or ideally you should probably plan on having money saved up and use grant money as like the best case scenario. This is talking about FHLB grant money. So there's certain financial institutions you have to opt in to get this and qualify through FHLB, and yeah, they require to look at your total household income. They want to know your kids' socials and their ages. And I mean, they really want to know everything and make sure that, you know, you're not trying to falsely get this money, because it's supposed to be for low income. And it's $5,000. The catch is you're supposed to live in the home for 5 years so that the $5,000 is forgiven. So it's free money as long as you've lived there for 5 years. What if you move out before then? I'm sure it's case by case basis, but ideally that's the law of the land. Those resources are kind of here too. So once we get that information, we always let the realtors know, or if a buyer is really interested in that money, then we let them know whether they truly qualify or not. And when we do that, we like to see your actual income, because we have to go off of year-to-date income. So on one end of the spectrum for underwriting, if you barely get overtime, then they don't even want to see it on the application. But then on the FHLB, if you get any sort of overtime, it has to be included in your income. But it's an awesome program. It's helped a lot of people. Some people that don't have to bring anything to closing, essentially, because they receive this, and then like the city grant money or the Interfaith Housing IDA program and stuff like that. If you ever have any questions in regards to it, we ideally find out in March.
You guys did fantastic.
Okay.
Awesome.
All right.
Yeah,
Take it away.